I'm Dan Ashton from Parkers, and I'm here with your market update for Q1 and predictions to what we see the market doing in Q2, which we are scarily in already. So one question that I get asked daily, it seems, at the moment is, what's the market doing? And in any kind of market, but particularly the sort of market that we're working in at the moment, we have to break it down into four areas of volume of houses coming onto the market, how many of those houses are achieving a sale, how many of those sales are having a fall through before exchange of contract, and obviously number of sales that are being completed. So if we take out 2020 and 2021, which were crazy markets, then we can look at what we would class as normal markets next to one another. 2023 so far, we have seen almost the same amount of properties coming onto the market as we did in 2022, 2019, 2018 and 2017, which is around 375,000 nationally from January to March. So in terms of sort of sales being agreed, there's a number of factors that are affecting things: high mortgage rates, buyer affordability due to other areas in life experiencing inflation, and the still relatively high price of properties on the market. We've seen around 30% fewer sales being agreed in 2023 compared to 2022, but we are already starting to see shooting signs of life for the spring market, so we do expect that to pick up. Now at Parkers, we have already exchanged this year almost exactly the same amount of property as we did year to date in 2022, but that isn't the norm. The industry has experienced huge levels of fall throughs across the board, which at its highest was around 40%, which is quite staggering. Now, due to I'm pleased to say, the thorough nature of our sales negotiators at the initial stage, the stringent financial checks that we carry out on behalf of clients at the offer stage, and perhaps most importantly, our fantastic sales progression team headed up by Emma George, our fall through rate of just 4.8% is far better than our competition. Now the next area we need to look at is the mortgage market, which obviously a very turbulent end to 2022 saw mortgage rates rocket, with lenders looking to insulate themselves against obviously a rising base rate and obviously uncertainty about how the market was going to proceed onwards. Thankfully, we've seen that settle down, and you can pick up a fixed rate mortgage around 3.8% to 4.5% at the moment, depending on loan to value and obviously length of that term. There's also talk of that base rate looking to come down later on in the year to deal with the inflation that we're currently experiencing, which should then obviously have a great effect on mortgage rates that you're able to secure. So for much more expert advice, please do let us know, and we can put you in touch with our expert colleagues at Beechwood Mortgages. And so all of those points that we've looked at there will naturally have an effect on property prices, and yes, we have seen prices drop over the last 3 months of this year and the 3 months that preceded it at the very end of 2022. Now, it's not as much as people have been reporting in the news. It differs in pockets across our areas, but 7% is the average that we've seen across our network, and that is something we think is going to continue in the short term, but certainly not at the rate that it has been thus far. And so at Parkers, we have experience of dealing with every single property market that you could possibly think. We have decades of experience and can look after you, whether you're looking for a general market update like this, pricing information, or looking to bring your house onto the market to actually find a buyer and get things moving. So thanks for watching. I'm going to hand you over to my colleague Simon West, who's our lettings area manager. He's incredibly experienced and is going to talk to you about the lettings market and how we're looking after our investor clients through that. Thanks for watching.
Q1 of 2023 has been very similar to the back end of last year. Demand is still hugely up, and over the space of the last 3 months, we've actually registered over triple the amount of applicants looking for rental properties compared to that of the first 3 months of 2022. Now, Supply is still hugely down. It's actually 4% down compared to last year as well, which again is leading to higher rental prices. Now, we haven't actually seen as much of an increase compared to that of last year, with an increase in rental prices of around about 4% this year. It is, however, 10% up compared to the first 3 months of last year, and we are expecting that to increase significantly over the next 6 months as we come into the spring and summer market, which are arguably our busiest times in the rental industry. With a lot of local companies recruiting and bringing families into the area, it really is a prime time to let. Investor purchases are still down at the moment, and I think this leads back on to what Dan was saying a moment ago about mortgage rates, and hopefully over the next 6 to 12 months, as the rates start to come down, investors will start to come back into the market, meaning that the supply starts to increase finally, as we've had 2 years now of significant sales from investors, and the stock hasn't replenished. So following on from our last video as well, we were talking about the interest of local villages and the suburbs around the towns and cities. Rightmove have now backed this up, saying that 48% of Londoners are considering moving out of the city into surrounding towns and villages. Having offices all the way from Tyreless through to Tadley and to Newbury, these make fantastic commuter towns with the M4 and train lines just on their doorsteps, giving easy access back into London. Now, with the increased demand from people coming out to our areas and people looking to upsize locally as well, we found that the majority of rental properties are actually on the market for less than a week before they've had an offer accepted, with actually 63% of rental properties listed going within the first week of marketing. So the rental market's holding its own at the moment, and we are expecting another fantastic couple of months ahead for the marketplace. So if you do have any queries, whether it be sales or rentals, or just want to chat about the marketplace or speak to a local professional, then please don't hesitate to get in contact with one of your local offices.